Let's talk about setting up your entity. How many types of entities are there for you to consider? When you're in real estate, there are primarily three: S Corp, C Corp, and LLC. Why should you incorporate? Let's go over the benefits. Benefit number one, asset protection. If something was to happen on your property and you get sued, guess what? Your personal assets are protected. Benefit number two, funding. Private money lenders and hard money lenders will want to lend under your entity instead of under your personal name. And the reason why is because should you default in the mortgage payment, they can foreclose in as little as 6 months if the property is under your entity. However, if the property is under your personal name, it can take up to 2 years to foreclose on your property through the court system. Benefit number three, tax. Depreciation, the biggest benefit. Okay, you're going to be able to write off a lot of expenses and you're going to get to keep most of your income. Now, which entity should you pick? Would that be dependent on your exit strategy? If I'm flipping, buy and hold, or wholesaling, well, the answer is any of these. It doesn't matter what your exit strategy is. The only one that I personally do not recommend is C Corp. The reason why is because it incurs double taxation at the corporate level and at the personal level, because all these entities are passed through into your personal tax return. Having said that, the rule of thumb is if it's only yourself, create an S Corp. If it's you and another partner or more, create an LLC. That's simple. Another question is, should you create an entity for every property you buy? And the answer is absolutely no. You're going to add overhead. You're going to add extra expenses. You need to file returns for every entity. Therefore, the answer should be driven by the equity. You're going to pile up as many properties as you can into one single entity until you reach $500,000 in equity. At that point, then you start moving properties to a new entity.